All right, so you've probably heard about crypto mining, the super expensive, super noisy hardware. But what if you could get in on the action without any of that? Today, we're going to deconstruct cloud mining. We'll use a real-world example to see how it's supposed to work, what they promise, and, yeah, what the catch might be. Let's dive in.
So let's just jump right in with the big question. How in the world do you mine Bitcoin without owning any hardware? I mean, mining is this whole complicated thing that keeps the network running and creates new coins. It's supposed to require all this powerful, specialized, and, let's be honest, really expensive gear. It sounds kind of impossible, right? Well, that's the exact puzzle that cloud mining says it's solved.
And here's their answer. Cloud mining. Basically, instead of setting up your own mining rig in your garage, you're renting a slice of a huge professional mining operation somewhere out there. You just pay a company, and they deal with all the hardware, the crazy electricity bills, and all the techie headaches. You get the mining power, they get the hassle. That's the idea, anyway.
Okay, so here's our game plan for today. First, we're going to look at the sales pitch. How they sell you the dream. Then we'll walk through their super simple 3-step process. After that, we'll get into the important stuff, the risks and the fine print. And finally, we'll land on the big takeaway from all this.
All right, first up, the pitch. How did these companies actually get you to sign on the dotted line? It's all about how they present it. Let's look at the key promises they're making to pull people in. And a huge part of that pitch is experience. You see the 6+, and you might think, so what? But in the crypto world, that's a long time. We're talking about a market that changes in the blink of an eye. So when a company says they've been around for over 6 years, what they're really trying to say is, hey, we're stable, we're reliable, you can trust us. And it's not just about experience. The sales pitch really leans on these core promises. First, a low barrier to entry, meaning you don't need a ton of cash to get started. You can just rent a little bit of hashing power. That's basically the computational horsepower you need to mine. Then they talk about transparent fees, even saying there are no service fees at all. And of course, you get all the stuff that makes you feel safe. High-level security, 24/7 support, and the promise that they're using the best, most dependable gear. It's all packaged to sound incredibly easy and totally risk-free.
Okay, that all sounds pretty appealing, right? But how does it actually work? Let's walk through the process they lay out for you step by step. And they make the user journey look so simple. Step 1, find a reputable firm. That's on you. Step 2, pick a contract. You just decide how much mining power you want to rent and for how long. Step 3, you just sit back and track your progress on a dashboard. And step 4, the part everyone's waiting for, you access your earnings and move them to your own digital wallet. Easy, right? But let's be real, the big question on everyone's mind is, how much money can I make? And to help answer that, these services usually have a profit calculator. It's a tool they give you to try and forecast what you might earn before you put any money down.
So how's this calculator work? It's actually really simple. You just tell it how much you're thinking of investing, your contract sum. Then you pick a duration, say 1 month, 3 months, or 6 months. The calculator takes that info, looks at the current price of Bitcoin, and then spits out a number, a projection of what you could potentially earn. The key word there is potential, because as you're about to see, this is not a promise.
And boom, right there, this is the fine print you've got to pay attention to. This little quote is usually sitting right under that exciting profit calculator, and it's so important. It says flat out that all numbers are estimates. Your actual revenue is going to swing based on 2 massive, unpredictable things: the price of Bitcoin, which we all know goes up and down like crazy, and something called mining difficulty. Just think of difficulty as how much competition there is. The more miners out there, the harder it is to earn a reward, and the smaller your piece of the pie becomes.
That disclaimer is the perfect jump-off point for our next section, the risks and the fine print. And what's interesting here is that we're going to look at what the company itself says about the downsides, pulling directly from their own FAQ page.
And to be fair, they don't completely sweep the risks under the rug. They come right out and say it is essential to be aware of the potential dangers. This is a pretty big admission. It tells you they're not just selling the dream, they're also covering their bases and giving you that necessary dose of reality.
And this really puts it all into perspective. You've got the potential versus the risks, side by side using their own language. On one hand, they're talking about beneficial outcomes and the dream of earning passive money. But on the other hand, they're admitting that profitability is tied to the market, that crypto prices can change dramatically. And this one's a huge deal.
They even point out that other similar platforms have had financial issues. That's a pretty gentle way of saying they've gone bust.
So, what's their solution to all these risks? Well, they basically tell you to do your homework. They say you should pick a legitimate and well-renowned service, do extensive research, read reviews from other users, and look for transparency. In other words, they're putting the ball squarely back in your court. It's up to you to figure out who's legit and who's not.
Okay, so after digging through the shiny sales pitch, the simple process, and the not-so-hidden risks, what's the real takeaway here? It really boils down to one single fundamental trade-off.
And this is it, right here. The whole idea of cloud mining in a nutshell. It offers you convenience. I mean, serious convenience. No hardware to buy, no crazy electric bills, no technical stress. But the price you pay for that convenience is control. You are handing over your investment to a third party and completely trusting them to do the right thing and deliver on their promises. Which really brings us to our final question, and it's a big one. In the world of digital assets, a world that was built on ideas like decentralization and not your keys, not your coins, is the appeal of simplicity really worth the loss of direct control? That's the question you really have to ask yourself before even thinking about something like cloud mining.